So let's look at the Yonela Bonga questions. We're going to do both at the same time. So the first one says calculate the VAT implications for her 2023 year of assessment. You're required to calculate for the entire year and not for a specific VAT period. Remember, she's a category B VAT vendor, so it's every 2 months. So they're saying ignore the fact that it's every 2 months, do it for the whole year. Show your calculations, clearly indicate if an amount's input or output tax, provide explanations where there's nothing. Right, there's the mark allocation. Then, after considering your answers in question 6, that's the one above, briefly discuss the income tax implications for 2023. You are required to provide a brief explanation if it will not be in taxable income. You must also clearly state and calculate the amounts will be used. Okay, so let's go and climb into this. So, first up, let's talk about the income. So, all of this income here will have output tax on it except for the long-term tenants. The output tax is 850,000 times 15% and 25,500 times 60% times 15% for the person that was there for more than 28 days. So, very simple. From an income tax perspective, what are we going to do? From an income tax perspective, remember that we will include the amounts excluding VAT. Because section 23C says it should be the amounts excluding VAT. So you would basically just say those amounts are all gross income and this is the amount that will be taxed. Next one is interest income. The 28,000, is there VAT on it? No, it's a financial service. Is the income tax on it? Yes, it will go into gross income and she will qualify for section 10(1)(I). Simple. The salaries. For VAT purposes, it's not an enterprise because it is salaries. And remember, salaries is not considered the furtherance of an enterprise, so there's nothing. From a tax perspective, the 170,000 you can claim under section 11A. The 240,000 she won't be able to claim because it is to herself. Okay, as you can see there. Then the motor vehicle. So first thing is, when she purchases it, input tax is denied. There's no company car. Okay, so let's make sure we're all on the same page. So first thing that you do, vehicle cost, input tax is denied. Then, can she claim the input tax on these amounts? Now remember, input tax is only denied on the cost of the vehicle. It's not denied on the other expenses, so she can claim it. Must she claim 80%, 20%, or what must she claim? Right? She'll only be allowed to claim 20% of it. So 3,500 for the insurance times 20% times 15%. For the petrol, it's 0 rated. For the maintenance, 3,200 times 20% times 15%. Interest cost, financial service. When it then comes to our income tax side of things, how much will she be able to claim? She will again be able to claim the amount only to 20% of it because she's used 80% of it. So she is allowed to claim it. Right, then the food input tax, she can claim it because although it's entertainment, the B&B covers all the direct and indirect costs, so she can claim it. For income tax purposes, that amount will be allowed as a deduction. And then the drawings, no VAT implications because there's no supply and there's also no deduction for it for income tax. And that's it for this question.